Guys, today we will discuss one of the important standard SA 550 related parties. Transaction between related parties have the high chance of fraud and fraud risk factors. That's the main subject matter in our discussion. How fraud risk factors arise. Why? Because related parties may tend to go out of normal course of business. What is out of normal course of business? Overpricing of purchase, underpricing of sales. Some transactions there is no considerations at all. That means the arm length price. The price between knowing and willing parties in an open market, fair market values is one example. When they deviate from this normal course of business, profit will be misstated to that extent. I will give one example to understand the concepts more clear manner. Satyam Software Solutions and Metas. Metas has invested in Satyam Software Solutions. They are the related parties. The money collected from stock market, initial public offers are given as a loan to Metas, who is the family business concerns of Ramalingam Raju. These money, what they did, they invested in several acres of lands in Andhra Pradesh. Why? They invested in the lands to boom the real estate market price. When they get the higher price, they will sell it off. This was the plan. So this is one example. The transaction between related parties contains the fraud risk factors. And the financial reporting framework, accounting standards also mentions transaction between related parties should be properly accounted for and disclosed in the books of account. So it's a financial framework requirement also. What is the role of our SA 550 in the context of related party? This is our subject matter. Because of the chances of the fraud, auditor should be professionally skeptic. There is a chances of committing fraud. So what are the auditor's responsibility? We are proceeding further into the discussion. Auditor should need to get a clear understanding of who are the related parties. What are the relationship between the parties and the entity? What kind of transactions has happened between the related party and the organization which we are going to audit? Auditor has to inquire these aspects to the management. Also, he has to inquire the new relationship. Who are the new relatives to our family business? Check, scrutinize those transactions. So he will get an idea about related party. Check whether this transaction has been properly accounted for and disclosed in the books of account. If it is okay, then there is no problem. Next step, because of the controls. If the controls is weaker with respect to this transaction, which will end up with fraud, and fraud risk factors are higher. So auditor has to understand what are the control for proper accounting of the related party transactions, what transactions they have concluded, who authorize and approve significant business transactions with the related party, who is the authorized person, and also he has to check who authorized the significant business transactions out of normal course of business. What is out of normal course of business? Here we deviate the terms, normal terms, isn't it? One example I will give you. Our business is on a purely cash basis business, but we are allowing credit to certain parties. So it is one example of out of normal course of business. Abnormal discount given to certain parties. This is one example of out of normal course of business. So the control aspects also auditor has to be checked. The last critical area is the undisclosed transactions, undisclosed relationship. If organization does not reveal any transactions with related party, they are hiding the transaction, anything which is hidden, which contains the element of fraud. It is the sensitive area. What audit procedure auditor has to do? Should auditor directly go to the management, inquire whether do you have any undisclosed relationship and transactions? Management will keep quiet, silent. Then what is the procedure available for an auditor? Auditor should be professionally skeptic in this aspect. Surely contain undisclosed transactions. Auditor has to inspect minutes of meetings of those charges with governance and management. Then he will get a clues about significant transactions. Who are the investors? Because of the investment, they will become holding subsidiary company. What are the significant transactions? Also, he can refer the books of contracts which is maintained in the organization. All these will give a clues of undisclosed relationship and undisclosed transactions. If he find out any such a transaction, what auditor's next duty is? He has to communicate with the engagement teams who are working upon the audit. He has to check thoroughly whether the transactions has concluded on arm length price. If we are a close people, our hands will go very low, narrow direction. If the parties unrelated, our arms will go this way. So whether we have to check whether any transaction has been concluded out of normal course of business. If yes, assess the impacts on that and properly account those transactions. Why? Because it is underpriced or overpriced or no considerations. It has to be properly accounted for. Consider his impacts on auditor's reports. This he has to mention in auditor's report. He has to properly disclose all those related party transactions. So this is our small discussions about related party transaction, related parties, and thank you for watching this video and have a nice wonderful day ahead.